they're issuing more currency, they're holding more government bonds, and they're holding more dollars. They wanted to do things that governments like to do during financial crises. All right, everybody, so we're continuing on here with the gold reserves as a percentage of money issued by a central bank. A couple videos ago, we talked about Norway, the little brother of Sweden. We're going to talk about big brother Sweden now. So I'm going to take off Norway's gold reserves here, which are in Norwegian red. Let's take that off and look at Sweden here in Swedish blue. This is actually central bank. Remember, this is gold reserves in the central bank and in the treasury. So all official gold reserves, how much does that equate as a percentage of the actual base money that the central banks issued and outstanding across the world? Some of the oldest data that I have here is from Sweden. Note how it's quite interesting. Of course, older data, how accurate is it? But Swedish Riksbank data goes back pretty far. And as far as gold versus the kroner from 1850, we can see here not much backing it, all right, 0 to 1% backing in the 1850s. And of course, I put that to a lot of the hard money gold aficionados out there who claim that in the old days, it was just always so that gold matched 100% the coinage and currency that was issued and outstanding by a central bank. Gold was always backing, is the key word they use, 100%. We can see that that's not nearly the case, and most of the time it's well below 50%. See, it does grow here after the US joins gold. Many other nations move from silver to gold. They do have more gold in the coffers of the Riksbank, about 15% of all kroner issued and outstanding by the central bank. And again, this is just the central bank, so imagine this percentage is even lower if you include the whole banking system and all the notes and deposits that the banking system issues, the checking accounts, if you will, which of course existed during this time. We get to World War I and we see the classic dip. Sweden inflates the money supply to pay for the war. They borrow to pay for the war. And that means that the gold percentage falls. After the war, it actually rebounds to a higher rate here. Then we get to the Gold Reserve Act, which is when FDR confiscated the gold in America, devalued gold up to $35 an ounce from $20 an ounce. So this, of course, increased the backing of Swedish gold. Went up to about almost 100%, but 70% here. And then during World War II, this is interesting, a little bit different than Norway and Britain and the United States as we've looked thus far. Pretty much stays constant, and quickly after Bretton Woods, it falls. Now, during World War II, what happened with Sweden? Well, they remained a neutral country. Doesn't mean it was easy for them, but they had this, at that point, 100-year plus tradition of remaining neutral in world conflicts. So they didn't have the need, because they weren't directly attacked by the Nazis, they didn't have the need, as did the Norwegians, as did the Dutch, the Belgians, the French, the Poles, as I've talked about. They didn't have the need to move their gold to the Western Hemisphere, to the Northern American continent, to Canada, to the United States, the Caribbean, as many central banks did. So they actually kept it here. And then interesting, they kind of got on board with the Bretton Woods Conference, and their gold percentage of notes outstanding dropped pretty rapidly. What does this mean? Well, they're simply holding less gold. They're issuing more currency. They're holding more government bonds, and they're holding more dollars. They're holding more dollars here. So you can see, unlike, let's say, the dollar itself, right, which the percentage stays higher after Bretton Woods, Sweden doesn't need that at all. They go pretty much into dollars almost immediately after World War II. Vietnam War, they hold a little bit more gold, okay? And note, the price is still frozen here at $35 an ounce. We're still on a technically this dollar gold reserve standard. Vietnam War continues on, Nixon shock, and Sweden looks like not much change, because the percentage, remember, this is relative to the gold price, the percentage increases during the 80s as it did for most countries, and then it falls back down with the bear market in gold, which lasted 20 years to Brown's bottom. Gordon Brown, Chancellor of the Exchequer, famously sold most of the UK's gold during this time. Interesting blip, though, for Sweden here during the global financial crisis. You see that the gold reserves fall for about 2 years here, from 2008 to 2010. Why did they do that? Well, they were actually selling gold. They were using the gold as typically is the point of what it's supposed to be used for. It's supposed to be liquidity, safe haven during the global financial crisis. We see that the gold price did dip a little bit here, which is actually when they started to sell a lot of it. But regardless, the gold price continued to go up here, and they didn't have it, so they started to buy more after 2 years. But why did they do that? Well, They wanted to do things that governments like to do during financial crises, bail out certain players, use some of that gold liquidity to help the economy. Whether that worked, whether that didn't, whether that's the right strategy, whether it isn't, it's not the point of this video. It's just to show you that they did cash out their gold during the global financial crisis. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. And then we see that they got back on the gold bandwagon in end of 2010 here. Gold price is still rising. Good for them. They bought some more. And their percentage is back up to, even higher than pre-2008, pre-GFC levels. But then, as is typical here, gold price was falling a little bit here post-2011. Looks like they sold some more. And even as the gold price rises here, they hold less. Okay, so it's a very interesting trend here where even safe Sweden is kind of following the global trend of holding less gold in their vaults. Where it used to be, Cold War times, 30-40% of the monetary base. Now it is only 10% of the monetary base. So there you go. Sweden, one of the world's oldest currencies, oldest central banks, although they weren't really operating like the Bank of England, sort of the first modern central bank. The Riksbank was the first central bank in the world, one of the oldest currencies in the world, and at the moment, they hold 10% in gold reserves versus all the currency, the money print that they have issued and outstanding. Let me know what you think of that in the show notes. Thanks for watching.